esperando para lo que va a ser esta charla enfocada especialmente en el mercado del Reino Unido. Vamos a estar hablando con Nick Jacobs de Taurus, va a estar como siempre también Ramiro Juliá de ASI, de America's Capital, su fundador y CEO. Quien les habla es Facundo Zonati, soy periodista para la CNN, periodista de negocios, siempre siguiendo los temas de empresas de familia y acompañando estos webinars que viene realizando ASI periódicamente, donde abordamos distintas temáticas, siempre obviamente de la mano del real estate, pero desde parques industriales, analizando sectores en particular en los Estados Unidos, ahora en Inglaterra. El último webinar fue sobre Brasil, y es importante que también sepan que pueden acceder a los webinars que fuimos desarrollando en los últimos meses. Están en la cuenta de YouTube de America's Capital y pueden encontrarlos también en las redes sociales, sobre todo en Instagram, donde pueden justamente linkear los distintos encuentros que hicimos enfocados en los mercados donde America's Capital, de la mano de Taurus, tiene participación activa. Así que es un placer poder sumar a esa serie de webinars el mercado del Reino Unido. Y en esta presentación, como en todas, van a poder hacer todo tipo de preguntas. Cualquier duda van a poder trasladarla a través del chat de preguntas y respuestas que tiene Zoom en la parte inferior, y los vamos a estar contestando a lo largo de la presentación o en el final. Así que quédense para participar de este encuentro. Son las 10 de la mañana y 1 minuto en Buenos Aires. Ya veo que se van sumando las personas que querían participar especialmente de este webinar. Para respetar los tiempos de todos, si les parecen, vamos a comenzar formalmente. Ramiro, si te parece, te cedo la palabra para presentar a Nick, y yo quedo también, obviamente, a disposición, tanto para aquellos que tienen consultas o dudas, me las pueden trasladar a través del chat, como les decía, de preguntas y respuestas en la parte inferior de Zoom. Ramiro, gracias, buen día y todo tuyo.
Gracias, Facu. Bueno, bienvenidos a todos. Muchas gracias, Facu, por la introducción. Es un lujo tenerte como siempre. Te seguimos, te escuchamos por la radio, te seguimos por Twitter, así que un placer que estés acá de host. Para mí es un placer hoy presentar a Nick. Vamos a estar switchando entre español e inglés. Así que, Nick, it's a pleasure to have you here. For me, it's an honor, double honor, not only for my family and the group that we represent, but also because we are part of the same family, which is Taurus Investment Holdings. Each of us in different jurisdictions, but with the same values and objectives. So Nick is the managing partner of Taurus Investment Holdings in UK. He has a tremendous team there. I met a few times with them. And it's a pleasure to have them on board and to be his partner. We already did some deals, 3 deals actually, 4, because we had done one before also with Nick and his team, which are very, very professional. So I'm glad that they accepted to share their insights about the UK market with us. So with further ado, I'll pass the presentation to Nick, that he prepared something for us. So thank you, Nick and Geoff, for joining us this morning here in Buenos Aires.
Great. Thank you, my friends and colleagues. I will have a little presentation for you. I think if you want to put the slides up, I'll talk to those, but I will introduce Jeff Lewis, who is my friend and co-director. Jeff and I have worked together since 2006, So we know each other too well. And we share an office here in London, and we really know what we're all thinking. But really, I'm the strategy and the talking, and Jeff is the person who really does everything. So really, he's the man who keeps everything safe, and I have crazy ideas. So there we are. Let me look at the slides, if we can turn on. We see the UK as a really interesting opportunity. Now is a challenging time, I think, in the world to invest. And I think one of the stories that is a tourist story, and Ramiro talked about us being a bit like a family. I think there is an ethos, a feeling, a sense that we all have, that we must be adventurous but cautious at the same time, that we do a lot of work to research and understand the market before we act. And I think it's important to be aware that often the best returns, and I mean risk-weighted returns, are to be made when the sun is not shining. When everything is okay and there's lots of growth and lots of money about and so forth, it's very difficult to compete and buy value. And often prices are driven very high, and you might be encouraged to take more risk. Whereas I think when it is a bit more difficult, years of experience help you understand the underlying dynamics of the market and where it might lead you. So we're not people who rush into the market, but we are saying there are some very interesting dynamics going on at the moment in the UK, and we'd encourage you to be thoughtful and listen with us. So I'm going to tell you a little bit about why the UK, some big basic facts and some stories, a little bit about what's happening now in the market, in the economy, just some very high level ideas, and a little bit about the tourist strategies and where we're going with those. I think also some of you have some investments, so happy to take questions on those as well. So if we can move to the next slide, that would be great. So this is a picture of Aldwych House, which is the building that our office is in now. We've taken space back in the building, but we invested in this. This was our first deal with Taurus in 2011. Peter Merrigan came over, and both he and I really liked the building, and we ended up buying it together. Jeff and I worked through this, and we basically took what was a very dull, sad building. It didn't look anything like it does now. It just had the wrong feel, wrong impression. Tenants were leaving, and it was actually very, very difficult, challenging building. And it was a difficult time in the market. But we felt there was a lot of room for opportunity. And we took the rents from about 5 million to 11 million. We refurbished layer by layer. We got planning consent for the roof. We put some amazing things in, like the amazing glass sculpture, the desks, everything was very carefully chosen. And it made it feel like $1 million when you walked in. So if I went in the building and people didn't say, wow, I was disappointed. The net result of 6 years' work was we sold it for £250 million. We bought it for 83, and it represented something very close to 3 times money for our investors. So we were all happy. But I just go back to the point that this is when we started with Taurus. So we go back a long time. But the other thing is we bought it in a difficult market and saw the opportunity. So if we move to the next slide, that would be great. What I probably should have said earlier is we'd worked in partnership before, but we finally set up Taurus UK, which is a proper growing company, major part of Taurus now. And I think in the last less than 2 years, we've got something like 450 million pounds worth of assets in gross value. So we're going, and we intend to get a lot bigger. Okay, so a little bit about the UK. Why the UK? So don't read all the headlines, is the first thing. Just look at the fundamentals. How many people have we got? About 70 million, 68 point something, growing every day. So even though we came out of Europe, we still have a lot of immigration. A lot of people want to come and live here. So 70 million. In the EU, only Germany is larger at 83 million. So it's actually a big country in terms of population. It's a predictable, stable place. It's a great place to do business if you want a certainty of your legal system, your government, always still frustrating, annoying people. But actually we have good laws, we understand them, very low levels of corruption, and a stable constitution. It was quite interesting having the new king and queen be officially sworn in, the coronation last weekend. Some of you may have seen it. And it shows actually that they still have some influence and are a balancing hand on the government. They still have to give their approval to the formation of a new government. And they're there, I think, just holding on to say, guys, be straight and sensible. And sometimes because your colleagues in the United States maybe could do with some of that from time to time when they have some interesting presidents around. Enough said, I'll get into trouble. The English language is important. It's thank you for speaking to me in English, and I apologize that my Spanish is very, very weak. But the English language is international and means that we can communicate with all parts of the globe. And the other thing which is great is our time zone. So there have been deals we've been doing where we've been talking to people in the United States at one end of the day and in Australia at the other end of the day. They're all fit in here. It's a simple little thing, but it actually makes a lot of difference. We're also, I think, seen as a gateway into Europe and a safe place to be. So even though Brexit has happened, which is a very sad thing, it still enables us to be an important part, a bridge, if you like, to Europe for people coming in from other areas. We also have control of our base rates, or the bank has control of base rates, so we're not tied in. And that actually, I think, is quite a valuable thing as well. If we move to the next slide, that'd be great. The real estate market. Okay, so we have a very large real estate market. It's highly sophisticated. It's complicated. We have many, many agents. We have a lot of computer-based data and information. We have teams of people analyzing every single property, certainly in London, certainly most things outside. And it's a very, very tight market. It's quite difficult to gain advantage, but it is quite sizable, and people really understand the trades they make. A lot of the value is concentrated in London. And I would like to make the point actually that as a kind of nail, if you like, to hang your theories about why I should invest here, you should do a survey. Just go online and do a survey. And any big question you ask about countries to invest in or cities to invest in, London will appear in the top 5. It's a nice, simple, anecdotal, easy survey to do. So London is really important for lots of reasons, but it's a hub that spins out lots of value for the country. There's a lot of emphasis from the government at the moment at growing the regions. Now there's a whole policy called levelling up. Essentially what the government is trying to do is put a lot of their expenditure into the major cities away from London. It's moved whole departments out. It's spending on infrastructure outside London. It's encouraging people like the BBC and so forth to move out to other areas. Those of you who've invested in Birmingham and Manchester, the BBC taken some of their business and put it in Manchester and in Birmingham. Great magnet for other people. Infrastructure, HS2, which is a high-speed rail line from London going out to Birmingham, will offer not only faster trains, but a lot more trains, will make Birmingham commutable. Birmingham is then a stepping stone into the Midlands and into the wider northern region. So very, very powerful things. The Elizabeth line, named after the late Queen, goes from east to west, across and beyond London, and opened finally last year, and was opened fully finally last year, and really actually bridges everywhere from Heathrow all the way right across to beyond Stratford in the east of London. So very, very powerful, meaning that people can be pulled in from lots of areas and reach around the country. We have deep capital markets in the UK with a lot of different players from many different regions. Now, again, we're always fashionable somewhere. So at the moment, we're seeing Singapore, Hong Kong, other Far East areas looking at the UK, the US, you guys as well. It's all very, very interesting. But it does mean that we're not actually just appealing to one set of people. There's capital that wants to come to the UK at all times. We have a very large, wealthy and sophisticated consumer market. Our spending on wealth and goods is very, very sizable. That feeds the rest of the economy. And I think you need to understand that gives a solidity, some safety in terms of the GDP, connected also to our financial markets, which again have enormous amounts of flows of money through them. In terms of the property itself, triple net leases, clear landlord and tenant legislation, we have rights, the tenants have rights, we understand where we are. Our leases have come down and are much shorter in length, but are still very clear, and they're triple net. So generally, it's great for the landlord. The tenant pays for the repairs, service charge, insurance, energy, everything. Jeff's the expert in making sure they pay as well, by the way. The last point here is that there has been, sorry, just on this very last point, is there has been a repricing in a lot of property. Okay, and that is why it's a really interesting time to buy. Some of it is correct repricing because it was related to funding or to demand and various other reasons, but actually it's often a very good time to buy. And certainly we're seeing in some sectors where the tip has been too much and it's starting to come back. And there's, for instance, in the industrial and logistics level area, we're seeing that at the moment. Next slide, please, be great. So lots of question marks here. Better value than Europe gives you a clue. I'm going to show you the next slide, which will have the countries on it. But this is from Cushman & Wakefield prime office yields. And I think you'll be surprised at where the UK is. So if we can flick to the next slide. There we are. So apart from Central and Eastern Europe, the UK has the highest prime office yield. Now, I didn't put too much weight on this, but I think it's an interesting figure. I hate averages. They tell you, they make science out of, out of nonsense, or nonsense out of science. But it does give you a feel that actually there is a bit of better yield in the UK than there is in Europe. Certainly, if you look at the French numbers, and that's a general French number, not just the prime, because the prime is really lower than that. There's a big margin to the UK. So the UK can look like better value. Next slide, if we can, thank you. Institutional interest. So where is the money coming from? Who wants to be here? You're not going to be alone in wanting to be here. INREV suggested that 61% of investors expect their allocations to increase in real estate over the next couple of years. And the UK has been identified as the top destination of investment for non-European investors, ahead of France and Germany. Okay, quite an interesting fact. And Savills, during the COVID period, reported that London is still the most liquid and resilient market in the whole of Europe. Pretty impressive statistics. So even when it's raining, it's still doing well here. Investment is also growing in the major we're seeing that a lot at the moment. Manchester in particular has grown very, very impressively. There has been a great deal of new development, both of offices and of rental properties and residential to sell, all of which has been taken up. The population continues to grow. It's really very impressive. We're seeing the same story in Birmingham. They're two of our, well, they are our favourite cities outside London. Very, very impressive. But it also shows that the economy is growing as we move out. So what's happening today in the economy? Who knows? But what I would say is it's not as exciting as the headlines. It's dull. Dull is a tedious word. But if you consider that a few months ago, there were headlines in the press suggesting that the UK was going to become a third world country. Liz Truss really shook everything up. Now that's just rubbish. What we're actually seeing is we've got very slow growth, but we've avoided a recession. And in fact, just a couple of hours ago, the Bank of England increased our base rate by another 0.25% because there's a little bit of inflation around wage growth. And it's actually showing that the economy has proved a little bit more resilient than was expected. And because we've avoided recession, they feel they want to be cautious and not have too much growth to overheat to increase inflation. So that's actually a positive thing. It cuts both ways, but it is saying that they believe that the UK economy is actually growing and moving and doing well. The worst thing you can have is stagnation. So it's not going to be exciting growth, but there is going to be some growth. Inflation is expected to have peaked and is likely to fall, depending on the survey, either about 3% by the year end and lower into next year. Nobody is exact whereabouts it is, but they're certain that the extremely high inflation that we're receiving at the moment has definitely peaked. Bank rate expectations are roughly, we're somewhere around the peak at the moment. It may be that there's one more increase, but it's very unlikely to be more than that. And if you look at the currency markets, they're also suggesting that the curve will flatten off. The general view is that we'll be around 3% long term over the next few years. Okay. Now I'm going to ask a question, which I'll come back to in a minute. But what's the average UK interest rate, bank rate, over the last, I've gone back all the way to the Big Bang in 87. I could also ask the same question of the US rate, but what's the UK rate been? You might want to write it down, just have a view. I'll answer it in a minute. So it feels like the rates are really high today, and I'll come back to you and tell you the answer in a minute. Next slide, if we can. This is a little bit about the UK, and if I've talked for too long, I apologize, but I'll just tell you a little bit about tourists and the three things that we're really looking at. I'm going to start just at the bottom of the slide. If you look at the 5 words at the bottom, these are all really important to tourists and how we work and how we look at property. Underlying systems, we like to be a little bit scientific, very orderly, know that we're going to be predictable. Very strong standards from our professionals, from people who work with us. We do a lot in joint venture, but the guys have got to be really good. We're good to people, and they're good back to us. Reputation is really important to us. We can't afford to make mistakes. We're not perfect, but we do absolutely everything to get it right. And our reputation is our most valuable asset here. Cash flow, so important. If you don't have a cash flow, you don't have a business. So we're always conscious of what the cash flow is going to be. In a development, it's, you know, down and then up at the end. In other areas, it's along there, but cash flow is the underlying thing. Property is actually something that allows you to keep the weather out and generates a cash flow. It's that simple. The result, we hope, is positive value for investors. We're always investors ourselves, and alongside completely allied to people who invest with us. So it's fairly organized. The green level is talking about ESG and how essential that is to all our thinking. It is a foundational factor in everything we do. That is becoming something that gives a premium to the product we produce. And I think also we're seeing that if you don't have the right ESG credentials, values will fall away. So it's very, very positive. And we're leading experts, if you like, in that field. So the three strategies, what are we looking at the moment? BTR, build to rent, multifamily, as the Americans say. This is very, very new in the UK, but it is growing at an exponential, really, really, really exciting rate. Very, very happy with this. We have 1,300 units under development at the moment. We're trying to buy more. We're looking at a lot of opportunities. And there's been a shift in the capital structure in this market. So this is a really great area. We're trying to buy as much as we can in this area. Our office strategy, those of you who've invested in Parsons Green will know, it's and we put it the wrong way around on the slide, but it's my fault. It's a brown to green strategy, taking buildings that are not fit for purpose, that don't have green credentials, and turning them into EPCA, BREEAM LEEDs, fully compliant, but also fitting for modern usage. People are in the office less these days. When they come in, they want all the right facilities, all the right working space, and a very efficient office. So that's really important. We have a second property under offer at the moment in that strategy. That's focused primarily on London, where there's enough value to enable you to carry out the works. The last strategy is one where if we see the right deal, and we're looking at the market quite a lot, we think values have moved out too much in industrial and logistics. They've gone from 3.5% out to 5.5%. And we're looking to buy some of those deals at the moment where there is still a lot of rental growth because there's not much supply being created. Next slide. I'm done. I'm going to answer the question just before I do that. The UK rate average since 1987 is 6.41%. So our rates at the moment are below the average rates we've experienced for a long time. Ladies and gentlemen, thank you very much.
Perfect, Nick. Thank you. Thank you. Great presentation. I have a question. Within this group, we have almost 35 participants. Some of them, they have invested and they are already investors with us in the last 3 deals that we have done over the last 3 years. And some are newcomers and probably will join in future deals. In terms of our existing deals, I mean, how do you see this 25% downfall affects our values going forward? And what is your strategy to mitigate or take advantage of that movement?
Okay, great. So great question. Really important you asked that. So where I talk about this kind of general 25% fall in some values, it's on the property which isn't right, doesn't fit the purpose. And that's have a shifting use of property. Retail is changed the way we use it. We don't have any retail. Offices, we're using that falling away in values to say, let's pick up the buildings which aren't right and which we can turn into EPCA, BREEAM, employee focused, and there's a premium, extra money being gained for those properties. Savills did a survey, and I'll get the numbers wrong, but they're indicative. Savills did a survey saying there was something like a 12% rental premium for EPCA offices, plus I think about a 10%, 5 or 10% capital value increase for these offices. So we see this as an advantage. It will force some people to sell, but we only buy the stock we want to collect. There's been no fall in value in the multifamily BTR sector. In fact, values there are increasing really, really rapidly. And so informally, okay, I can tell you that the deal in Salford Quays, Anchorage, Manchester, we just had well, the first thing is to say that it's ahead of program. It should complete in July. It's about nearly 6 months ahead of program on build, which is was absolutely delighted with the builder. That's number one. Two, the letting agents have given us their figures. They're going to go out in July and start letting. And those figures are 20% ahead. No, maybe a bit more, I think, about 20% ahead of where we predicted they would be next year.
Yeah,
so it's very encouraging. Okay, but don't rely. Wait. It hasn't landed yet. No champagne. Let's wait and see. But it's encouraging. Okay, so
yeah, for those who doesn't know, Anchorage is a BTR, built to family project with how many units? Is
294, just under 300.
Yeah, 394 high-rise building. It was done in a record time. Very interesting, the construction method that you guys put there. So it's coming along very nicely, and it's in Manchester. And also, parenthesis, if anyone wants to make questions, please use the Q&A. No, Facu, that's the way to do it. And there are coming questions there. I've seen it. So feel free to shoot questions. It's an honor to have Nick and Goff here. They're very, very busy making deals. So take advantage of this. Take the opportunity to shoot. One more question I had.
Okay.
Is, if you can explain a little bit, Nick, what is going on with, and you kind of explain a little more about their level up strategy and how that is impacting cities like Birmingham or like Manchester, and what are the opportunities you are seeing there?
Okay, so leveling up is a term that the government came up with. The argument was made to them that taxes were paid all over the country, but most of it was spent on London and the southeast. And in terms of value, wealth, and so forth, that was probably true. So they adopted a policy. It's enshrined in law now that there has to be a better balance of government expenditure and government focus on areas outside London and the southeast. And London and the southeast are so strong, they don't really need any help. So some examples, the biggest, most obvious example is High Speed 2, HS2, which is a major train project, which goes from, is it Euston? From Euston Station in London to Birmingham. It's a completely new line, although some of it parallel to the existing one. And it creates a station in Birmingham, very close to our Digbeth site, literally 10 minutes walk to our Digbeth site. And trains there will be very, very frequent, and they're about an hour to Birmingham. And it changes Birmingham from being somewhere in the north to being commutable to London, but also to being a gateway city to go to other cities such as Manchester and Leeds, Liverpool. So Manchester and Birmingham are always cities 2 and 3 from London. Government have actually moved departments there. They've encouraged the BBC to move there. They've encouraged other industries to take space there. They've encouraged the universities to grow. And actually the university fashion is something quite important to these cities. If the city is working well and has enough jobs and is a great place to live, then you get students staying. So universities can be very, very valuable hubs. And Manchester, I believe, has close to 60% of its graduates choose to stay for at least 3 years in Manchester. That's really powerful, and that's a big change that's taken place over about the last 5 years. So leveling up is Ramiro, a long-term policy, but quite powerful.
Nick, thanks for the presentation. I have a question from the audience. What mechanisms are you building into your project to mitigate the risk of inflation? Okay, great question. Inflation is quite challenging, but over the many years we have dealt with inflation a number of times. So where it tends to be difficult is in construction cost. So wherever possible, we will negotiate the building price at the beginning of the project and try and get a fixed price contract so that we know that we've locked in the inflation figure at that point. Now, the reality is that because you've taken that risk out, you end up paying a little bit more for your build, but you don't have the same risk that you might have if you didn't have a fixed price. So getting fixed price building contracts is quite important. Little bit more complexity that Jeff and I know about there is it requires a bit more time, a little bit more work up front to design all the detail of your building, and then your contractor can do the pricing and give you a fixed price. It's not always the best thing. So we have experience at the moment where the prices come in too high on a fixed price. So we have to go back and negotiate. So by taking time, you can mitigate against building costs, but it does take more time and you might pay a premium to do that. But it's very rare that we will enter a contract where we are open to the to build cost inflation. The other couple of things I would say is, one is that build price inflation seems to have peaked in the UK and materials are now more available, more predictable, lower cost. Labor is still in demand, but there has been a noticeable change in the contractors' desire to take up new projects. So there are less projects being let. So the inflationary pressure is reducing quite dramatically at the moment. So we're seeing it calm. The other thing I wanted to say about inflation is it can also work for you. So first of all, if you have debt, you borrow when the pound is worth £1 and you pay it back when it's worth 95p. That helps. You also get inflation on your rents, so that your rental value often increases as well. And certainly in the BTR sector, we're seeing a lot of rental growth at the moment. So it's a big factor, it's difficult, but with a bit of work, you can reduce risk. Perfect. Thanks. Les comparto a la audiencia, si quieren compartir preguntas incluso en español, entiendo que ya estamos en tiempo, de todos modos pueden hacer las preguntas y se las vamos a contestar por privado. En ese sentido no tengan, digamos, ningún pudor. Cualquier duda, cualquier inquietud, compártanla a través de, tanto como les decía, de preguntas y respuestas en la parte inferior del Zoom, como a través de los distintos medios que tiene ASI para que nos contacten. Ramiro, no sé si tenés una pregunta adicional. La verdad que...
Creo que está en tiempo y para ser puntual, diría que thank you very much, Nick and Geoff. I think that the idea of this dialogue is to see your faces, to have this open dialogue that we have already, but to share this with our group and our community. So it was great to have you here, and hopefully we stay tuned for the next deal. we got very anxious now. So probably we can repeat that this meeting when the deal is more coming to market. Thank you, Nick and Geoff, and thank you again, Facu, for your excellent.
Muchas gracias. Muchas gracias a todos los que nos acompañaron y nos volvemos a encontrar seguramente en el próximo webinar. Thank you.
Thank you, guys. Anytime.
Bye, Nick. Thank you. Take care.
Bye-bye.